Have you ever wondered how banks transform seemingly simple financial transactions into powerful tools of economic manipulation? Behind every digital interaction lies an intricate web of technological and psychological mechanisms designed to control your financial behavior with unprecedented precision and sophistication. Modern banking has evolved far beyond simple money storage, becoming a complex ecosystem of data extraction, predictive modeling, and strategic consumer influence. The moment you swipe a card or click transfer, a lightning-fast choreography of algorithmic assessments begins. Sophisticated networks instantly analyze not just the monetary transaction, but the contextual data surrounding your financial movement. Machine learning systems cross-reference your transaction against hundreds of behavioral markers, creating real-time risk profiles that extend far beyond traditional credit scoring. These systems don't merely record transactions. They construct comprehensive psychological profiles that predict your future economic choices with remarkable accuracy. Transaction routing represents a marvel of hidden technological complexity. What appears to be an instantaneous transfer actually traverses multiple international banking networks, each extracting microscopic fees and collecting granular data points. Your seemingly simple bank transfer might cross 3 or 4 different computational systems, each performing sophisticated risk assessments and value extractions before the money reaches its final destination. These networks operate with such speed and precision that consumers remain completely oblivious to the intricate infrastructure governing their financial interactions. Credit scoring algorithms have transformed from basic numerical assessments into advanced predictive models that anticipate consumer behavior with unprecedented sophistication. By integrating machine learning techniques, banks can now categorize individuals into specific consumer archetypes, understanding not just their financial history, but their potential future economic trajectories. These systems analyze purchasing patterns, lifestyle indicators, and even social media interactions to create comprehensive economic personas that guide targeted financial products and strategic marketing approaches. The psychological engineering extends far beyond pure data analysis. Banks meticulously design mobile interfaces, notification strategies, and interaction frameworks specifically engineered to subconsciously guide financial decision-making. Every color choice, button placement, and interaction flow is a calculated attempt to influence how consumers perceive and interact with their money. These design elements tap into deep psychological triggers, creating subtle nudges that incrementally shape spending behaviors and financial attitudes. Consumer financial information has become the most valuable commodity in the digital economy. Banks have transformed from traditional money storage institutions into sophisticated data-driven enterprises that treat every transaction as a potential asset. Your financial history is continuously analyzed, packaged, and monetized across complex global networks. The value extracted isn't just monetary, it's the predictive power embedded in understanding individual and collective economic behaviors. Technological infrastructure enables banks to create incredibly precise behavioral prediction models. By integrating artificial intelligence, massive computational networks, and advanced statistical modeling, financial institutions can now anticipate consumer needs and vulnerabilities with remarkable precision. These systems don't just react to financial behaviors, they proactively create environments that subtly encourage specific economic choices, effectively becoming architects of consumer financial psychology. Credit limits, overdraft protections, and reward programs represent precisely engineered psychological tools designed to generate specific behavioral responses. Banks understand human motivation so intimately that they can predict and subtly manipulate financial choices with extraordinary accuracy. Each financial product is carefully constructed to create specific emotional and rational responses, guiding consumers toward predetermined economic pathways that maximize institutional profitability. The fusion of technology, psychology, and financial strategy has created a global economic infrastructure that operates with unprecedented complexity and control. What consumers perceive as neutral financial services are actually sophisticated systems designed to extract maximum economic value while maintaining the illusion of individual choice and autonomy. Every interaction becomes a carefully orchestrated dance of data, prediction, and strategic influence. Next time you engage in a financial transaction, recognize that you're participating in a complex global network that understands your economic behavior more comprehensively than you might understand yourself. The true currency of modern banking isn't dollars and cents, but the intricate web of data, prediction, and strategic manipulation that governs our increasingly digital economic landscape. Did you know that the average person unknowingly generates over $3,500 in hidden bank profits every single year? This shocking statistic reveals a complex financial world most consumers never see. Today, we're pulling back the curtain on how banks secretly control your money through intricate psychological and technological systems designed to maximize their profits while manipulating your spending behavior. Let's start with a personal journey. Imagine Sarah, a typical professional who believes she understands her banking system. Like most people, she thinks her transactions are simple. Money goes in, money goes out. But beneath this seemingly straightforward process lies an incredibly sophisticated web of financial manipulation that tracks, analyzes, and strategically influences every single financial decision you make. Modern banking is no longer just about storing money. It's a high-stakes psychological game. Banks have developed advanced algorithms that don't just record your transactions. They predict, nudge, and subtly guide your financial behavior. These systems analyze your spending patterns with microscopic precision, creating detailed profiles that allow banks to engineer financial experiences tailored to maximize their revenue. Consider transaction routing, a process most people never think about. When you swipe your credit card or make an online purchase, your transaction doesn't simply travel from point A to point B. Instead, it passes through multiple complex networks, each designed to extract maximum value. Banks utilize sophisticated routing algorithms that determine the most profitable path for each transaction, generating micro-revenues through interchange fees, processing charges, and strategic timing. The first layer of this financial manipulation involves something called transaction categorization. Every purchase you make gets instantly tagged, analyzed, and stored. Banks aren't just recording what you buy, they're creating comprehensive psychological profiles of your spending habits. These profiles become powerful tools for targeted marketing, credit scoring, and creating personalized financial products that seem helpful but are ultimately designed to increase bank profits. Take payment processing, for example. What seems like an instantaneous transaction is actually a multi-layered system involving numerous intermediaries. Each intermediary takes a small cut, creating a complex ecosystem where banks generate revenue at every possible stage. Credit card networks, payment processors, acquiring banks, they're all participating in an intricate dance that transforms your simple purchase into a multi-million-dollar revenue stream. Psychological pricing strategies play a massive role in this hidden financial web. Banks understand human behavior at a neurological level. They design interfaces, transaction flows, and financial products that subtly nudge consumers towards decisions that benefit the bank. Those seemingly random credit limit increases, the conveniently timed overdraft protection, they're carefully calculated psychological triggers designed to maximize bank revenues. The technological infrastructure behind these systems is mind-bogglingly complex. Machine learning algorithms continuously analyze millions of transactions in real time, identifying patterns, predicting behaviors, and creating dynamic financial environments that adapt to individual consumer profiles. Your banking experience is essentially a personalized, algorithmically generated journey engineered to optimize bank profits. Data monetization represents another critical aspect of this hidden financial ecosystem. Every transaction you make generates valuable data that banks can sell, analyze, or use for targeted marketing. Your financial footprint becomes a commodity, traded and leveraged in ways most consumers cannot even imagine. What seems like a simple purchase becomes a rich source of strategic information for financial institutions. Most consumers remain blissfully unaware of these sophisticated systems. They see banking as a utility, a simple service for storing and moving money. But in reality, it's a highly advanced, psychologically nuanced industry designed to extract maximum value from every single interaction. The banking system isn't just a service, it's a meticulously engineered machine that transforms human financial behavior into a precise, profitable science. Understanding these mechanisms doesn't mean rejecting banking systems, it means becoming